All right, welcome everybody. This is the second time we've gone live here, but just now, Fed Chairman Powell just made an announcement and said that they're going to cut interest rates by 0.25%. Here's where we're at right now. The range is between 4.5 and 4.75%, and you can see there the beginning of the cuts. And he is, this is unanimous. First time it was kind of a unanimous decision. But it was expected that was going to happen. So today we want to talk about how does this impact Tesla? What's your thinking, Jeff?
Well, I mean, this is good. I mean, just the meeting overall, I don't think there was, really any surprises. I think the Fed actually likes this because what's happened since the last meeting. The last meeting they did the 50 basis point cut. This is 25, so there's been 75 basis points of cuts, but the actual real rates have gone up about 60 basis points. So he's starting to get a little bit more aligned with markets, which is good. I do think that we're going to get another one in December. I know that people are questioning. I do think that they're going to continue cutting in December, and just a lot of things are. There wasn't a lot to come out of the meeting. It was kind of just the Fed plodding along to its goals. I know there's all these there are all these questions about his employment going forward with the new administration, but I actually think that's a bit of a non-issue. But the title of the space is, what does this mean to Tesla stock? And I mean, ultimately, we want rates coming down so cars are more affordable. And Tesla needs to meet less of or utilize less of that burden in terms of buying these rates down. So what we actually need in the economy is we need a little bit of weakening right now because the bond markets are keeping the rates actually buoyed pretty high while the Fed funds rate is coming down. The Fed funds rate is in no man's land. I mean, it looks like real inflation is in the lower twos, and yet we're just now getting below 5% in terms of the funds rate. So there's a 3% or so gap there, and to me, I mean, they're just flying out in no man's land. They're kind of way above where they need to be. You don't get all of that in one cut unless there's something obviously catastrophic going on with the economy. So I think they just need to keep plodding along, keep driving these cuts. Companies like Tesla, remember Tesla is not only vehicles, they also sell energy. And these are long-term commitments companies need to make, and there's financing of capital involved. So this is really good for Tesla, what Tesla sells. This is really good news for Tesla, and honestly, the Fed just needs to continue cutting.
Good afternoon. My colleagues.
Okay. Yeah, we don't need to play what he said, but basically he was just saying simply that, the inflation has eased substantially. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point. So was this already built in, Xander? The stock is already known about it. Tesla stock is aware of this. Is there going to be an additional kind of reaction? Because as interest rates looking like, by listening to the Fed Powell here, that he is going to continue to cutting rates. There was nothing right? And there was a lot of people that was concerned that the bond rates were kind of indicating that maybe he may not cut the rates as fast as he's indicating he would. What do you think, Xander?
Yeah. Going into the meeting, I think we had like a 67% chance of another 25 basis cut for December. And that's how it exited the meeting. Or the interview. So he didn't give anything new. It was literally expected. He came in, gave his commentary, answered the questions, sidestepped the political commentary or questioning, and he kind of said that the labor market isn't deteriorating. So he eased that question. He said, yields are like he talked down the yields being an issue, and so basically saying that the labor markets aren't deteriorating and inflation isn't going up. That was the main thing, is like they're trying to aim the economy and the policy down the middle as opposed to letting it get to either side. I thought the stagflation comment or question was good, and you could see actually his reaction was I don't know if he was surprised, but so I thought that it was exactly what we expected, and the markets barely moved. I was very closely watching Tesla position and deploying some leaps, and then I took some off the table, and so I'm right in the middle. We'll see how it closes. I'm watching it right now. Some kind of multitasking, but yeah, I thought that the markets responded in the way that you would expect. I don't. Will we rip here right past 300? You asked how it impacts Tesla. That's the question. Does power hour here mean that we go to 300? We just hit 299.66, which is a second tap at the 290, the 300 barrier. Typically, they like threes. And then if this just doesn't ease off and go back down to 295 on the close, the volume weighted average price, the VWAP, is kind of where I aim for closes. That's where the day traders and the gamblers that we were talking in our previous stream, they end up. So depending on what it does, there's tomorrow might be an exciting day, or it might be a cooling breather, let it settle down. But as you can see, there's no wild rip up or down.
Okay, so Jeff, I wanted to ask you then, given that that's the case, right? Nothing happened to Tesla because it was either built in already, but this is a 0.25 basis point reduction. Is this going to show up in margin in Q4?
It depends what the bond markets do. Right now, they've responded to the 75 basis points in cuts with 60 basis points of tightening. So the real rates haven't come down for people buying cars.
No, I know that, but I guess what I should have said was that Tesla has been offering 0% financing. They've been eating this, right?
Well, part of it. Part of it's the banks, part of it's Tesla. So yeah. So I don't know. I don't know if it's going to be material in the quarter. I think a lot of this stuff is built in, to be honest with you. The most material thing that Tesla can do in Q4 is ship a lot of cars. That and then a lot of energy. Those are the big things. So if they can get over this 515, they're going to just have tremendous utilization on their fixed capital, and they're going to take their cost structure down in the factory commensurate. As long as they can do it without a bunch of expedites. That's where this gets tricky. If they don't have smooth inbound orders, you don't want this last month of December having 40% of the units delivered in that. You don't want some big number. It's probably going to be around that number. You don't want it to be some even outsized. They've had third months in a quarter where they've delivered 60%, 70% of the quarter. So as long as the quarter is balanced, then they won't have to expedite inbound material, and they won't have to expedite outbound to the customer to hit that number. I think the growth number is important for them because they've obviously built in the inbound supply to take all that on. So you don't want to turn that faucet off. So I think that's the biggest thing for the quarter. I think there's 25 basis points. This is all, to me, is just building along the narrative. And that's the narrative. Remember 18 months ago on a Tesla earnings call, it was skies falling, real rates are, this is a major issue. And now we're just on the other side of it. We're in a rate easing cycle. We're in a macro rate easing cycle. That's good. By the way, one more thing. The U.S. auto market in October was fairly hot.
Yeah.
And that's a good sign for Tesla. So, I think it's that trend continues and the real SAR comes in closer to 16 million units of vehicles sold
17.
in the U.S. 16. I don't think it's going to get to 17.
I saw 17 as a potential. That's where it's headed.
I don't know how you do. I don't know how you do another million. The U.S. economy only right now is absorbing about 1.3 million cars per month. So I don't know how you add, the 300,000 or 400,000. If you do, it would just be out of this world. But by the way, there's certainly the inventory. There's about 2.6 million cars in the U.S. right now in inventory. So they certainly could. But anyway, we'll see. By the way, there's going to be a lot of discounting. The new 25 models are coming in November. They've already been coming in, quite frankly. And so a lot of dealers want to get these 24s off the lot. So I think the best thing for Tesla is actually a pretty hot auto market. People are out there buying.
Okay.
It says that people are out there buying cars. It's a good thing. And we're just, to me, again, we have this macro, a little bit of our wind to our back. Not a big burst, not a big, huge push, but a nice wind to the back.
So I guess where I'm getting confused is that what you said was absolutely correct. What happened in the last couple of years ago was inflation rose, interest rates were just raised very quickly. Tesla and automakers got hit hard. They had to cut prices significantly. Well, now that we're seeing interest rates being cut, and yet both of you are saying, well, it's already built in. It's nothing really. It's not going to be impacting the bond market yet, those kind of things. So when does it appear, or will it not appear at all in Tesla's, if not margin, then at least, increased sales of cars until the interest rates for the actual car buying loans, those have to change, right?
Yeah, I mean, it's got to change pretty meaningfully. So I still think it's a bit of a tough environment for $30,000, $40,000, $50,000 cars being sold. I still think it's tough. You see Rivian, capitulated. A number of people that sell more expensive vehicles, they're all actually capitulating a bit. But again, we did have a good data point in October. So let's see. There's been some mixed signals here and there, but it appears the consumer is still, relatively strong. So we'll see. The thing I get worried about the most, and again, wrapped up in all this Fed data, was that 12,000 data point on employment in October. A lot of people are kind of just writing it off to hurricanes, writing it off to this. Mm-hmm. That number should have been, that prediction was already ratcheted down to like 125 to 150,000 jobs, and then it only came in at 12. So it was already ratcheted down for the hurricane, natural disaster issues, and it came in at 12K. So if there's another print in November that's like that, and by the way, in the private sector, it's negative. A lot of these are government jobs. So that's the part of this. If the job market side of this starts cracking and it goes quick, you could have a big reverberate because they're not going to be buying cars. So that's the thing to keep. To me, that's the thing to keep an eye on. The inflation side of it is to me is coming down in an orderly manner. One more thing to watch is insurance has to keep coming down. That is one component that Tesla can indirectly help with where they offer insurance in certain localities, but not everywhere. And some of that is actually a big decision maker. So people are getting some, like on Cybertrucks and other vehicles, they're getting gigantic insurance bills. So even that's entering into the equation.
Okay. Xander, give us an update on the stock in about 5 minutes. But in the meantime, I want to ask this question about Trump. So when Trump was elected, we saw a lot of the institutional analysts give massive price upgrades. They attributed to the Trump administration being able to reduce regulations, especially that Elon is there. Now the Fed is independent. What do you think about, how he answered this, right? He was asked, if President Trump asked you to leave, would you go? He said no. Can you follow up on that? Do you think legally you're not required to leave? No. And of course, I think we already heard Trump say that he's going to let Powell continue his term until 2026. So let's listen to what he says.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Love it. Love it. So what is the impact of that? Does it matter if he stays? Nothing, right?
Nothing.
If he's
People
replaced.
People trying to get clicks and trying to get famous on social media. I know that question was going to come up because there's a new administration. Supposedly there's reporting that Trump said, hey, yeah, definitely want you on for your full term. I mean, Trump's going to keep everybody a little bit on their toes at this point in time. Not going to necessarily get an all clear. And maybe that's not true. Maybe that's true for actually most incoming administrations. So, yeah. But it's important that the Fed is separate from the government as much as possible, even though I think there's still, there could be some movement back and forth. Remember, the head of the National Economic Council, that's on Biden's cabinet, is the former vice chair of the Fed, the most recent vice chair of the Fed, and she's on like so. The thing that there's not any whispers going back and forth, I think is, I don't know, whatever. But I think it's a non-issue. I think it's a non-issue for Tesla. It's a non-issue. Well, the markets though like stability, and they like Powell in there, even though he's been late to put the interest rate hikes on, and he's probably going to be late to take them off. They said inflation was transitory. It was, but it was just a really long period of. Even though all that happened, they still kind of view him as a little bit more of a steady hand. And even if he's going to change what he's doing from a policy perspective, usually it gets out into a couple of points in the media a month or so before, and the markets can kind of prepare. So I think markets like stability. So I think it is an issue, but it's, I don't know, to me, it's just trying to make kind of a headline.
Yeah, I took it as, that if Trump asked him now to step down, because like people are making him to a legal, formed it in a legal question, or they did, and you wouldn't? No, right now he's going to serve his term, and yeah, so I didn't take that, and I think that ultimately, is he interviewing for his next term, or is he worried about Elon coming in and changing things up? I don't know. I don't spend too much time worrying about that. I think the important part is the policy that they take with the federal funds rate, and I thought the conversation regarding data, using current data that we had, was that's the important part. Is, are we just so dependent on lagging data versus that was happening real time?
So last time President Trump was president, he gave tremendous pressure to the Fed to, cut rates. Would he do the same thing now in January, February? With Elon there too? Would they consider, say, hey, would they start pressuring the Fed, even though they're supposed to be independent, and really put political pressure on them to just cut rates, or they're just going to let this run? What's the chances of that?
Very high that he's going to say what's on his mind. And by the way, these are some two pretty smart people in this space. Not saying that Powell isn't, but I think both of them are going to say what's on their mind and what they think needs to happen. But I also think that data is going to be relatively supportive unless there's a crack. And again, I think the big risk is a crack in the labor market. I think that that is the biggest risk in all of this. If that really starts breaking in the other direction, then they've got to come in and they got to cut more deeply, more quickly.
Yeah. Well, Elon will tell you that the reason why there's inflation is because of government spending, and so he'll go, I'm going to cut the government spending so that we can reduce inflation. That's his answer, right?
Yeah, and I think the Fed and markets will look at that, and it'd be part of the equation. The Fed tries to keep fiscal policy and what they're doing as separate as possible, but ultimately it's part of their response. It has to come in the form of what happened fiscally. I mean, the reason we have all this inflation is because of all that increase in spending that occurred again for the pandemic, and then even after the pandemic, just the massive increase in spending. So the thing though about the spend rate in the government, if Elon goes in and does what, they say they go in and go after these cuts are going to be on a run rate basis, meaning he's talked about even up to 2-year severances for employees. So it's going to be more of a run rate thing, not so much tomorrow we're going to be spending less in the government. There may be some of that. There may be some, quick wins and low-hanging fruit, but a lot of this is going to be on a run rate basis, and it'll fall off tremendously, which is what you want.
Could Elon influence this? Because it's so obviously tied to the auto business, so obviously tied to Tesla. If he cuts the rates, is this one of those,
No.
conflict of interest things? If he forces Trump to say, let's cut it by 3%, let's get down to 2% right away. my
the
business
Fed
will succeed. You know,
the Fed talks to business leaders. The Fed talks to businesses. And of course, I mean, Elon has been on X, and he's been very vocal about what he sees and why he's seeing it. And he'll be a loud voice in this, but is he going to directly influence rates? I do not believe so.
Xander, what's going on with the stock? And I'm still curious why the stock did not move. It's because it's already built in. Everybody expected a 0.25% cut, and nothing's going to make that.
It's moved 3% today.
Yeah. I mean, it's moving around.
It went.
And
So you wait. You think that part of the rise this morning, you said at 3%, that's because of the expected rate cut?
No. The point is it's moved up. It's not like it's like, I mean, it's moved up. This is a decent move in one day.
So okay, let's back up. Where was the stock price on Monday?
260?
No, 238.
230.
Okay, 238. Okay.
Yeah.
We're at 300.
Yeah.
So the stock price has moved. We hit 290 resistance yesterday multiple times. I went back to 2021. Last time it was this way on the way up. I found that same resistance. So this isn't a straight up line, right? This isn't going to go to the moon. It's going to zigzag up. Overall, look at the trend. We have gapped up massively. This is big. And so, is there a reaction? The reaction is very measured in both directions. Now you have to acquire people that are going to ignore valuation, right? That believe the story. What you're seeing now with the current EPS, like what fund managers have to go and they have to get permission, right, to deploy unless they're the key decision maker. So this is gonna, there's gonna be resistance at 300. I've said this. This is normal. Those are big psychological levels. But did we move up? Yeah. We broke 290, and that was huge. And now this little pullback, this is normal for day traders, people that move money in and out intraday, that don't want overnight exposure and risk. All of those components of the market are what you're going to see in the stock price. But overall, these are all tailwinds, right? The Fed pivot, when it occurred, was the first kind of green flag to start looking at equities in the long term. There's going to be a major shift by like the lowering of the interest rates is going to stimulate the small business owners to start investing in equipment. So I'm not saying anything profound here, but that's the entire point. Is there a broadening that's going to occur in the like small caps? Is money going to be spent? Like does the business owners start feeling comfortable and confident in the economy? And that's what we got from Chairman Powell, was that everything's good. Keep making your decisions how you see fit. I as a business owner enjoy the lowering of interest rates. That allows me to maybe buy equipment or whatever, or make upgrades to my business. So so.
But what I heard Jeff say earlier was that it hasn't yet impacted consumers to increase their purchasing. It's not yet translated to auto loans being cut.
It'll take time.
Yeah. Okay.
Right, because if you're already getting 0% interest from Tesla or whoever, and you can afford it, in your mind you don't see a threat to your job or a threat to your standard of living. You're going to you're going to buy a car if you need a car. Are people going to go and buy like super luxurious things because you got a 25 basis point cut? No, but it's.
I'll tell you this: one of the policy proposals from this administration is to deduct the interest on a consumer car loan if it's made in the United States.
Mm-hmm.
All of the Tesla vehicles you buy in the United States are made in the United States. If that happens, that's a huge benefit for people and for Tesla. That's what I say. People are worried about, the IRA goes, what you have to understand, like what replaces it from a policy perspective. What is the administration trying to do? They're trying to drive jobs here in the United States. So I just be careful, like be careful with these, Trump trades, and be careful. Like, again, everybody try to put U.S. solar in a basket. They try to put all, batteries, everything in this basket and say, oh, we're not going to build batteries. No, we don't want to import this stuff anymore. We want to actually build it here. So if you're a company and you're building this stuff here, especially if you're building it in a red state or swing state, I would be careful about thinking that a lot of that stuff is going away. I don't think it's going away. What is going away is the government telling you what to buy economically. That happens in other countries, and it's incentivized EV purchases. In China, they actually de-incentivize you to buy a gas car, and they put massive incentives on EVs. What this administration is saying is that they're probably not going to do that. So that side of it may go away. But in terms of like, you're going to build batteries and you're going to build energy storage here, I think that's going to be that's either those incentives are going to remain, or they're going to be bolstered, or they're going to come back in a different form, which is if you make it here, then and you export it, or you ship it here, you're going to get credit for it. And the most important thing is like the dumping of batteries from China. I keep going back to energy storage because it's so important to Tesla. It's so important to other stocks that maybe some of our followers are into, like EOS, for example. If you make it here, I think it's going to actually get supported. And again, there may be some movement in the top line of the policies, but in the end, if you make it here, I think it's going to get tremendous support, especially if you're in a swing state or a red state. So look out.
Mm-hmm. Well, what I heard was that Trump won on Tuesday. Bank of England cut their rates yesterday. Today, as expected, Fed cut their rates 0.25%. And then tomorrow, we might hear news that Chinese government is going to do another round of stimulus. So these are all signs that it's printing money.
So China may be forced into that, and that's the car. If these tariff walls go up, you're going to get puts and takes on all these different sides. But from a Tesla perspective, they've done the hard work on this already, which is localizing your supply chain in the factory in the region that you're selling your product. So if these tariff walls go up between the China and U.S., 70% of everything that goes into Tesla today is already sourced domestically inside of the U.S. And so it's going to be, and they can continue to increase localization. I think Shanghai is at like 95%. So if the walls go up, these factories are insulated. They're going to keep buying stuff locally, building stuff locally, and shipping it locally. It's the stuff that goes across countries. That's where the price increases are going to come in and start hurting people. But the Trump administration's, stopping, especially stopping Mexico. If China was setting up this beachfront, we saw them doing it with suppliers in Mexico to just drive cars across the border. That's going to help. And again, there's a big debate on this and how this should be done, and let free markets, happen. The problem is the die's already been cast. China already built their supply chain. They've already built their mineral sourcing, refining. They're the top. They have the top 2 battery suppliers in EVs in the world are in China. Like, they're already there. So if you just want to fold your arms and say, I don't like tariffs, let the free market happen, the U.S. auto market is going to get absolutely annihilated. Tesla will do okay in that. The other ones are in that. More importantly, their supply chains are going to get annihilated. And you've got 3 million people in jobs attached to that. Mm-hmm. So I know we're getting a little bit off the.
No, not at all. This news just came out this morning that BYD hits brakes on Canadian expansion plans amid sting of tariffs. So they've already, are making decisions now.
Yep. And that China-Mexico plan that Tesla Mexico plan is toast. You can put a fork in that right now.
Hold on, I got something for that. Here it is. Mexican economy chief wants to sound out Musk on Tesla plant plans. They want to please please talk to us. Jeff, I don't know if it's toast yet. because it could be for their plans for South America. But yeah, they may decide to postpone this for sure.
Yeah, possibly. So in South America, that's interesting. And I've done import work and manufacturing in several of those countries. There is a play. There is a play for Mexico, especially for like Central America and the kind of the northern part of South America. But there's also a play for Brazil and for Argentina, which those countries they honestly want you to insource inside of their country. So it's very complex. I could have this conversation for hours with people. I'll tell people is that if you saw what I saw over the last 2 decades, I've done distribution in 150 different countries. I was shocked at how open it was to just get product into the US. And honestly, it was just like free reign. And these other countries like Brazil, like Argentina, they had punitive, unbelievable tariff. Like you wouldn't even think about importing your product there without building it there because the economics would be so bad. And that's been happening for years. So anyway, it's just
Okay.
it's a fascinating discussion, especially if you've been exposed to it. But it changes
So-
too. It's like it's
yeah.
not one recipe that fits all forever.
Xander, you said something earlier that it's in line with this conversation, right? Which is you said that businesses will be, as you see the cuts go down, as you see economy improving, you're more confident to invest. What about Tesla then? Could Tesla now say, remember the famous Elon saying a couple of years ago, we are concerned about the future. We don't know where it's going to go. And so they clamp down on spend. Could they now start spending, especially since he feels like he has his, the ear of the government? He might feel more confident about the future of the economy. Do you think that Tesla may decide to invest in new factories? We just talked about them. You said Giga Mexico's toast. Well, if there's interest rates cut again, you got a good economy coming, maybe they will start spending more.
Yeah, I think the question is a good one. They're already spending. I just think the question, like your question is specific to factories, and getting a factory on each continent makes sense. And why are we assuming that they're not actively pursuing that path still as they were? They might not be going outside of the US. They're building their semi factory. That's still on the path, and they're really investing in compute because that's the play. They'll previously you had pressure with not having enough capacity to manufacture vehicles, and then during COVID especially, you saw how demand was high, and that caused prices to surge for their vehicles. And the argument from anyone was like, well, why don't they just build a factory on each one? Well, that takes time. So they're still on that path. Are we on a path to 20 million units by 2030? I don't know. Maybe it needs to be cut down. That's a good question to ask management.
I don't think the 20 million 2030 is any more the target. If he is so fully on board with the robo-taxi plan, that 20 million number was before based on human-driven cars.
Right. It made sense at that time that they're going to turn over the entire fleet. But that's the point. Is what are they deciding is the most optimal path forward? They're already spending billions of dollars, so they are investing. But can they now feel more comfortable to invest in more things?
Mm-hmm.
Sure. But they don't just decide to put a factory somewhere until they can staff it. And Jeff can speak much more eloquently regarding that topic.
Tesla's building, arguably they're building 3 to 5 factories right now. You have the Shanghai Megapack factory going, you've got Nevada going, you've got the data center, which is an AI factory in Texas going. So, and then you've got this lease, space buyout in
Germany,
and also Texas. So arguably, they are expanding. They took if you look at the 10Q, I think nudged their capex up from an expectation of 10 billion to 11 billion. So they're in spend mode. I think that would only increase. It was great to see the free cash flow print this last quarter. They got another 1.3 billion that was above consensus. They had 2.7 billion in cash. So they're in a good spot. Tesla's investing. Tesla's building. The key thing, and I advise clients on this all the time at mass scale. We are moving towards localization of manufacturing. This is happening. And Tesla has been building for this for some period of time. The only question is as we go along the way and as we start implementing tariffs, it's not to put walls up to keep them up. It's actually to figure out if there's a deal there that can be made between countries. And if there's a deal that can be made, now all of a sudden you have a big export lane that opens up. And then that factory that you built, you thought it was only serving this market, can actually serve another market. And then you can have this great rebalancing from a utilization and supply demand planning perspective that Shanghai has been enjoying for a long period of time. So ideally, from a cost perspective, you want localization, but from kind of a supply demand, you'd also want an export lane open. So I think tariffs are a mean to an end. I don't think they go on, they stay on forever. It's more of like, can you get to a deal that mutually benefits both countries? And the first thing I think they're going to do is they're going to figure out this reciprocal side of it. So there's not this huge lopsided, tariff. Just before 2017, the inbound tariff on anything for the auto market for China was like 2.5% in the U.S. and they were tariffing us over 20% inbound in the China. Just FYI, and that was going on for years. I think the first step is just to kind of like get some normalization of this. And I think, and again, if you're a country and you're dealing with the United States on this, if they all of a sudden bring their tariffs up to match yours, it's going to be a huge impact to you, just given the size of the U.S. economy. So anyway, we're getting a little bit off, but I think it all kind of does play with Tesla and what Tesla is doing. I think Tesla's they're in a very good spot because of how they design their supply chains already. They don't have to go in. I have companies calling now that are just like, holy shit, like this is really happening. Trump admin, holy shit, like I'm not going to be able to get my product from China here to the US without some massive tariff going on. What should I do? How do I get out of China? Where's the best place? Where's the next best place to go to? And how quickly can I get there? That's the number one call I've gotten over the last like 48 hours.
Wow.
Okay. So the stock closed at 296. Is there any expectation that anything's going to change because of the Fed decision today, or if it didn't already move by now, nothing about the Fed decision is going to impact it tomorrow?
If you're asking me, no, everything is
Built in now.
You knew that it was going to happen. So now it's just a question of, who's deploying into it, right? Are we going to get further upgrades from analysts? Like getting Bank of America, right? There was Bank of America that went from 300 something. If this wave continues, then like value is perceived. So if you're sitting on a bunch of cash on the sidelines, you have a Fed easing, and you're waiting like, okay, well now the going rate for Tesla shares $300. Am I going to pay that? Ooh, look at the PE ratio. That's really high. I'm not going to, or this fund decides not to. But are funds going to short here? All of this is a dynamic thing, and this is why exposure overnight is important. Buying and holding makes the most sense. You don't worry about this stuff. But if you're active, you're going to look at it. Expectation for tomorrow, if I were to throw the dart, I think we're going to go retest 300. And I don't know if we break through, but kind of that $10 trading range, although it's been more like 15, 285 to 300 is what I would expect to see tomorrow. And I don't think there's any kind of sell-off that occurs because of what Powell said. And then it's just a question of you're selling a story to the new, to the Tesla non-owner, to the non-holder of the stock. So are those people buying the story? The robotaxi event is huge. If you didn't know about Tesla, now you know. So ultimately you need your next wave of consumers, both for the stock and for the vehicles. So and whatever else they decide to come up with. So I think that's what we'll continue to see it oscillate.
All right. Thank you, guys. Thank you both for joining us. This is the good a great analysis of the reaction to the Fed decision. They just cut it by 0.25%. It is what was expected. It's now 4.5 to 4.75%. Thanks, everybody. We'll come in next time. Thanks. Bye-bye.